warm welcome from my side, from the British Chamber of Commerce. My name is Ilka Hartmann, I'm the Managing Director, and I really want to thank DZ Bank and especially Markus Pratsch for organizing today's event and sponsoring today's event. I think, Markus, you put a wonderful group of experts together, and I don't want to steal too much time because there's expert talk ahead of us. Thank you very much, and I will turn off the moderation to Markus now. Have a great webinar today on the future we all need.
Yeah, dear Ilka, dear BCCG, thank you very much for organizing this webinar. Ladies and gentlemen, also on behalf of my colleague Frank Scheidig, Chairman of BCCG Rhine-Main and DZ Bank, it gives me immense pleasure to welcome you all on today's discussion on sustainable finance. Well, as you know, the road towards sustainability is unthinkable without the participation of the capital markets, and public money is not enough. Fortunately, investors have started to recognize the sign of times and realizing that finance was one of the missing links on the sustainable agenda so far. And this is where the opportunity lies, channeling private sector capital in the right sustainable projects. So we are now in a kind of new era of finance, in an investment race to attract the trillions in private capital we need for the sustainable transformation. And ladies and gentlemen, the last days brought great news for sustainable finance. The EU successfully returned to the market with its social bonds under the EU SURE program. The UK has finally announced to launch its first sovereign green bond. And there is a promise that this won't be the only gilt in the future. We have also seen that the UK announced mandatory TCFD reporting by 2025. And last but not least, when we look across the big pond, President-elect Joe Biden confirmed that the US will return to the Paris Accord on his first day in office. Ladies and gentlemen, it's a great pleasure to have 5 experts on sustainable finance here with me, discussing current trends in sustainable finance. Now I would like to take the chance that everyone can introduce yourself. So Danae, please introduce yourself and elaborate which role sustainable finance plays in your everyday working life.
Thank you, Markus. It's a great pleasure to be part of this. Thank you to you and Frank for organizing, and also to the British Chamber of Commerce in Germany. It's a great pleasure to work with you again, and the work of DZ Bank in this area has really been very consistent, so it's great to partner again. I work for the official Monetary and Financial Institutions Forum. I'm the chief economist there, and also chair the Sustainable Policy Institute that we set up this year. And on membership organization for central banks, sovereign funds, public pension funds, as well as private sector institutions and international organizations and development banks. So we work with them in the area of sustainability, both in terms of the climate-related risk management and supervision and regulation, particularly what the central banks are doing with private sector organizations, what kind of regulatory measures they're putting in place for them. And also on the capital market side, working with a lot of the asset owners, public investors like pension funds and sovereign funds that hold trillions of assets, how they're integrating sustainability in their actions, in their investments. And also on the practical side of sustainability, on the data measurement rating side with ratings agencies and data providers. So that's our involvement in this area. Thank you.
Yeah, thanks, Danae. So I give over to Sean. Please introduce yourself, and which role does sustainable finance play in your everyday working life?
Well, Markus, we've known each other for a long time. You know that I'm a single track kind of guy. Unfortunately, I've decided that bonds are exciting, which is, of course, not what one normally think about when you start thinking about bonds. They're meant to be safe and dull and boring. But for me, they're green and sustainable, and they have become exciting. So as a result, they're a very central part of my life, which is very unfortunate for my dinner party companions whenever I have a dinner with them. But a more sober answer, if I might. The Climate Bonds Initiative is a global NGO for green bonds, for mobilizing capital in debt capital markets for climate solutions. Of course, more interestingly, we've been involved in the apparatus for the market. Standards in China and now in Europe. I've been a member of the H-Leg, the Tetting-Lexberg group, and now the platform looking at a taxonomy, disclosure arrangements, and these will be the big stories of the coming year to drive this market and to turn it into a market with a common platform. We'll talk about that a bit more later.
Okay, thanks, Sean. Great to have you on board. So, Nick, yeah, please introduce yourself and what role does sustainable finance play in your everyday working life?
Well, Marcus, thanks very much, and thank you for inviting me to join this great group, and welcome everyone. So yes, my name is Nick Robbins. I'm what's called a professor in practice for sustainable finance. So that means I'm not a full-time academic. I'm a person coming in from the finance sector, and I work at the London School of Economics. Our focus really is to connect the worlds of research and analysis with the transformation in the financial system we need to see. A few things we work on directly, so very, very pleased to see the UK government announcing a green sovereign bond this week, and really interested to see that it directly linked that to issues around green jobs and linking that with prosperity around the country. So I think that's a big theme, obviously, with COVID. A lot of work around just transition. How can we achieve net zero with social progress as well? What's the role of banks, investors in regions and so on? And then working in a similar area to Danae in terms of central banks. I co-chair a group called Inspire, which is a research stakeholder of the Network for Greening the Financial System. And we've built up a portfolio of research projects around the world, and also recently released a toolbox of crisis response measures to identify how central banks, as they protect and support economies and financial systems through this crisis, how can they also connect that with their climate change ambitions and obligations? Thank you.
Yeah, thank you very much, Nick. So Sylvain, please introduce yourself and what role does sustainable finance play in your everyday working life?
Thank you. Hello, everyone. So Sylvain Chateau, I'm based in Paris. I actually co-founded Beyond Ratings back in 2014, and the objective of this company was to bring a new set of analysis on sovereign bond risk, especially embedding the climate issues and more generally the ESG components to it. The company was sold to London Stock Exchange Group last year, and I'm now heading the product management team for sustainable investment. So basically what we are doing is to innovate in the space, offer new products, be it indexes, data solutions, or analytic solutions to the investment community. So yeah, it's every day of my life is about that for the last 6 years.
Okay, great. Yeah, data is a big role in sustainable finance. We'll come back to this later. So last but not least, back to London again. Robert, please introduce yourself and which role does sustainable finance play in your everyday life?
Yes, hello. Thank you, Marcus. Thank you to the BCCG for being able to participate today. My name is Robert Koller. I'm the CEO and founder of eppf, which stands for European Primary Placement Facility. We are in the boring space of bonds as well, which we also find exciting. We are a platform that covers the full value chain of bond issuance. We allow companies, municipalities and others to issue bonds in real time and at a much reduced cost than before. And as a lawyer by training, I have done quite a lot of bonds in the past with social or green area or touch point. In my law firm work on a pro bono basis, and we have taken over this strong conviction which all our participants and founders and employees share into the company. And we really want to bring the market of green bonds a step further, to make it a separate asset class, and to make use of proceeds binding. We're also working on some pro bono style bonds, which, for example, include a rainforest conservation bond. We strongly share this. We just issued a bond for the London Borough of Sutton, which is now listed on the London Stock Exchange, although not labeled social or green. A large amount of these proceeds go to the development of a cancer research center. So it's actually quite gratifying also to work in these areas of finance and see the results of it.
Okay, Thank you, Robert. So let's move to the interesting world of the fixed income sphere. So I start with Sean. You already mentioned it. The EU is currently working on a kind of common language for sustainable finance. So will the EU taxonomy and the related green bond standard?
Jetzt guten Tag, ich habe einen verpassten Anruf bekommen.
And do you see any hurdles for the market with regards to this regulatory initiative?
I should alert Michael Spitz that he's not on mute, so we hear everything he says. The answer is yes, of course, that's the intent. And there are some things that will make this happen. I mean, the fact that Europe will issue more than 200 billion euros of green bonds to finance the Recovery and Resilience Fund, backed by, also linked to the taxonomy and the green bond standard, will give weight to that as a measure and regulation.
Genau, nee, haben wir aktuell nicht, muss ich sagen. Also wenn wir keine Kunden haben.
If someone knows Michael's text number, text him and tell him that he's speaking another call. So clearly this is the intent. Now, of course, we've still got some speed bumps to get to deal with. The taxonomy will not come into regulation for a couple more months. There's a consultation period, and politics is politics. There could still be problems. There's work to be done. I'm saying this because I want you all to be alert, watching the taxonomy and making sure that it stays both true to the science. I know Sylvain will understand what I'm talking about there in those tensions, but also practical. So DZ Bank needs to be able to apply it without it costing a fortune in compliance fees. So the tension between those two is what it's about. And to be honest, we're not there yet. We will see the delegated act next week, and then we'll have a period to comment on that. But it is the intent of the Commission. It is the intent of all the actors involved that this will be a massive market. And we will be able to support this market with preferencing, as in special funds, green quantitative easing, as well as rules. That's the future.
Okay, thank you, Sean. So let's stick a little bit to green bonds. So Robert, are green bonds really a kind of separate asset class, and what improvements could be addressed?
Thank you, Marcus, for this question. I think it's actually a very important one. At the moment, I think it's disputed whether they are separate asset class because they don't distinguish themselves from normal senior unsecured or other bonds that are issued by corporates or others. You have a use of proceeds intention, but if the prospectus is well written by my legal colleagues, you will also have 2 pages of risk factors in the front of the prospectus saying that this use of proceeds do not necessarily agree with what is done then. And this is understandable from a point of view, from an issuer's point of view, because until now it was very difficult for issuers to commit to use of proceeds in a legally binding way without exposing them to what we call frivolous lawsuits. For example, a hedge fund in New York is suing you because you did not comply with a certain green covenant, and then maybe even causing a group default or cross default. So that is for sure a fear that issuers have and should have, and which avoided, let's say, to the creation of a real separate asset class, which means that they legally also distinguish themselves from other bonds. I think that nowadays in the loan sector we have seen that this development has taken place. There it's easier because you know who your counterparts are, and you know that your banks will not sue you for extortionist reasons. And in the bond sector, I think we now have the possibility and the technology available to protect issuers from these type of frivolous lawsuits, but also to protect investors who more and more need to rely on binding covenants that are necessary because they're also responsible to their investors. So bringing these two together is a bit tricky, but the solutions are available nowadays, and I think it's really time to move the green bond sector to this next stage. And the question that I always say is, if you're able to go the extra mile, why wouldn't you do it?
Okay, great. Thank you, Robert. Yeah, Danae, when it comes to green bonds or sustainable bonds issuance in general, is it time for sovereigns to step out of the shadow of supranationals who opened the market in 2007? I mean, we have seen some sovereign issuance recently from Germany, for example. I said UK has now announced, but the part of sovereigns in the market is still very small. So is there a chance to step out of the shadow?
Yeah, as you said, we're already seeing that, Marcus. We're already seeing sovereigns expanding in this area, and some also doing repeat issuances as well. So some are newcomers in this. Germany this year, the UK now has announced plans. I think for a lot of DMOs, debt management offices that we speak to beyond Europe, and we have seen issuances elsewhere in Africa, no less. But I think the issue there often is actually finding the projects to finance and creating a pipeline for these. This is something that there is that element of starting in this journey, and then the actual structuring and what form the sovereign bond will take. Even in the case of Germany, the German DMO did play around with different options before finalizing. Will it be a normal bond with a green add-on? Will it be a twin bonds? There's lots of options and ways to structure it, and having that dialogue with the market, with investors, in that process is something that takes time. It's also a sharing of best practice across the different debt management offices that is starting to take place now. I think supranationals, development banks are still leading in that. They're one step ahead, and we are seeing how they're now going to issue beyond green bonds, other types of sustainability bonds as well. We saw the coronavirus bond that the African Development Bank issued, for example, or social bonds, the blue bonds. The ADB is doing a lot of pioneering work there as well on the biodiversity side and the blue economy. So there is a lot more momentum, knowledge, and already know-how of how to do this in the case of development banks and supranationals. But we are seeing very strong interest from sovereigns. I think the additional issue that is on sovereigns' mind is also the how this fits with their curve, their yield curve building, and that's very important and primary consideration. So we've also spoken to a lot of DMOs who are quite reluctant to enter the sovereign green bond issuance space because of that. And I think they're following, but we'll have to wait some time before it becomes really mainstream in the sovereign space.
Okay, thank you. So yeah, you already talked about new types of bonds in the market, Nick. We also see target-linked bonds and transition bonds on the market, which are not undisputed. Which role do they play on the sustainable finance agenda?
Well, I think that, 2020 will be the year where I think that sort of broadening of the sustainable bond market has really taken off. Obviously, green bonds still continuing to be the major segment, the social bonds, the crisis bonds. And I think then this question about transition finance, which I would really see not necessarily as a separate category, but an overarching category within which you have a whole series of different mechanisms, which green bonds are in the vanguard in many ways. One of the things we worked on in the UK as part of what we call the Green Plus groups, ourselves, the London School of Economics, Green Finance Institute, and the Impact Investing Institute, was really to see whether you could have a green sovereign bond which could overcome sometimes this false distinction between green and social. So if a green sovereign bond is helping to invest in building retrofit and sustainable transport and so on, that will be a jobs generator. So actually, how can we make these links and not see green and social as often in sort of two separate universes? So I think we were very pleased this week to see the Chancellor announce the green sovereign bond, the first of a series, but also make that connection with green jobs and the regional dimension. So I think the sort of transition finance is a very interesting way to go. And I know that is also a framework whereby we can take considerations of just transition, and particularly if we're talking about high carbon sectors, how that sort of social transformation is taken forward, whether that's coal mining sectors, utilities, oil and gas, or even potentially now the aviation sector in light of COVID.
Okay, thank you very much, Nick. So Sylvain, could you elaborate a little bit which role stock exchanges, and especially the London Stock Exchange, play with regards to the sustainable finance agenda and also in fixed income markets?
Sure. So before I talk about stock exchanges, I'd just like to add on what has just been said. I think it's very important to understand that there is a number of new products emerging on the market, green bonds, social bonds, sustainable bonds, the AUM that is collected is a very good sign. Now, from an index provider perspective, we also are very keen to look at the existing outstanding debt market and look at how we can actually replicate a number of fixed income indices with a climate or an ESG version of them. So you may have heard of the Climate WGBI that we have launched. WGBI is one of the biggest sovereign bond index, and it's there, and it's used as a benchmark for a lot of investors. Now, I think it's very interesting to be able to launch a climate version of it, which basically will reweight the country's relative weight in regards to their exposure to climate risks. So, and in that sense, it really also helps in terms of leveraging fixed income to actually transition the capital market flows into a more sustainable underliers in a way. So that's for I would say the index part. Now, as you know, the London Stock Exchange Group is a stock exchange to start with, and we have done a number of initiatives as regards to how sustainable this business or this industry has to become. So we've had a number of initiatives that I can list. I mean, I can probably give you a sense of that. But what's very interesting to understand is that stock exchanges have a unique position in how they connect the investment industry with the corporate issuers, and in that regard, they can really facilitate the dialogue when it comes to sustainable finance. So in that sense, we've had we've been following the UN Sustainable Stock Exchange Initiative to develop a consistent climate reporting guidance for each exchange to roll out in their respective markets. So there's been a letter coming out from our group CEO David Schremer and Mike Carney to exchange CEOs on that. So I think that really is a good example. Also, we are very proactive to establish a green mark for a number of products, and we would use our green revenue data to actually try to push forward this notion of green economy mark to a number of issuers. So that's typically how a stock exchange can be part of the game.
Okay, thank you very much. So you already mentioned it in the introduction. Around 12 months ago, most of us met in Madrid when the world was still, I would call it normal, yeah? Now the situation has changed. We are living in a pandemic. So Sean, which role do sustainable bonds play on Europe's sustainable recovery agenda?
Well, to answer that question, you need to understand something about the pandemic. Folks, this is a climate crisis. It is not isolated from this agenda. This is as a result of pathogens jumping between species from degraded ecosystems, exactly as has been predicted by the Intergovernmental Panel on an IPCC Health Committee for 30 years. And in fact, they're predicting that the 21st century, thanks to climate change, will be a century of pandemics. This is just the first one that broke through. There will be more. And the worse climate change is, the worse the pandemic tempo is going to be. So as we recover from this pandemic, we have to be very aware of what we have to do to avoid more horrors like 2020. It has been a horror year. We will need to make sure we reduce emissions because that reduces the risks of future pandemics. So get behind Ursula von der Leyen, everyone. 55% reductions in 2030 is a minimum we have to achieve. We do need to make sure that we invest in making our societies better prepared for the climate shocks that are going to happen. So that is a health system that can be responsive and that knows how to deal with pandemics. Well, that's not what we know from France, Madrid, London, Frankfurt at the moment. We have to look to Seoul and South Korea and Taiwan for those answers. And we need to make sure that we prepare for other shocks, infrastructure hardening, as the Dutch are doing, the Netherlands is doing with the sovereign green bond, preparing for increased sea level. All of these have got to be in the agenda. Now, we can do this whilst also addressing the short-term impacts. Job loss. My God, we've lost this idea that we used to have in Europe of how to rapidly create jobs. We can do this by meeting our climate goals of energy efficiency measures, which is essentially a zillion construction jobs in Europe, fast pace, which will also get our emissions down, and so on. So I think we're seeing this in Europe now. Build Back Better is on everyone's lips. Recovery and resilience, they're not separate issues. The Recovery and Resilience Fund, a third green, the other 2/3, you have to show how you're improving the resilience of your country, get access to that 750 billion. We're doing it. We need to spread that message around the world now, folks, and of course, make sure we actually follow through.
Thanks, Sean. So, Nick, what lessons have you learned from the Corona crisis so far with regards to the sustainable finance agenda?
I think it's really interesting in a sense that what has happened, I think, with the crisis is actually it's driven forward the sustainable finance agenda. And if we look back perhaps over the last 20 years, that has always happened. So in a sense, responsible investment was really born out of the 2000 dot-com crisis, where we realized the volatility and long-term asset owners wanted a longer-term approach. We had the global financial crisis. That led to another surge upwards and gave birth to the notion of the carbon bubble. So I think often in crises, that's the time when maybe people who are more conventionally minded say, well, they're their children. Now's the time to put climate change to one side and we'll focus on the immediate issues. That hasn't happened this time because I think, as Sean has said, we know the roots of this crisis lie in the degradation of nature and climate change. And also we know that actually the solutions coming out of it is going to be a green economy. And that's because that's a more labor-intensive economy, it's a smarter economy, and it's a stronger economy. So I think that sense of actually sustainable finance coming out stronger is very profound. And I think also you've seen that perhaps also in the regulatory community. You've seen sort of central banks stepping up their action on climate change. One of the things we haven't seen yet is, however, central banks linking their sort of monetary and liquidity measures with climate change objectives. I think that's going to be a coming issue, but certainly the crisis hasn't dampened anything. And also I think it's helped us to connect the E and the S of ESG, which I think previously had been somewhat separate. And now we have the news that the Fed will be joining the Network for Greening the Financial System. So things will go global perhaps as well.
Okay, thank you very much, Nick. Danae, with SURE, Next Generation EU, the EU will become one of the largest issuers of sustainable bonds, both social and green bonds. What does this mean for the role of the euro versus the US dollar?
Thanks, Marcus. I think this is a really great question because actually when you think about the international role of the euro, it's a currency that has not really become an international currency. It's a very young currency, but you still see dollar dominating in capital markets, and euro compared to what you would expect in terms of the role it plays in international reserves, it's very low. But one area where it is punching above its weight is green finance. And actually, just around 50% of green bonds are issued in euros, which is a very big share compared to the role of the euro in capital markets more broadly. And out of this 50%, just under half, so 30% of the green bonds that are issued in euros are from those that are outside of the euro area. So issuers are choosing euro-denominated bonds, even though they're not euro area issuers themselves. And that's quite important. It's a popular currency where it comes to green finance. Now, thinking about the day after, yes, the efforts that the EU is doing in that space and that we heard from Sean are supportive in that direction, that the euro will remain a very important international currency and that it is perhaps a channel for the euro to build a more international role. But we also just heard from Nick and earlier that there is a change in direction in the US as well. Joe Biden saying that they will rejoin or change course when it comes to the Paris Climate Accord, also the Fed joining the NGFS. So I think there will be an interesting time ahead with the dollar also moving ahead in that area, which is not a bad thing. The more activity there is, the better. But I think the euro is already very much ahead, and it should capitalize on that. And building capital markets in green finance stronger with the US also entering that market will be to the benefit of the euro, having had that first mover advantage.
Okay, thanks. So let's go further to the let's say foundations of the fixed income market. Sylvain, you also mentioned the importance of data. So ESG factors are highly relevant to fixed income outcomes. And yeah, so where do you see currently the biggest challenges or hurdles for integrating ESG into fixed income?
Sure. So I will just do a comment to say that out of ESG, to react to what was just said, I totally agree. S has been really overlooked over the last years. G has been always, especially in the sovereign bonds, G has been incorporated for very long years. E has been like the big trend, and we were part of the game to better understand the exposure to environment, energy transition, climate risk, and so on. Now the pandemic really shows us how all this is so much intertwined, and we definitely need to better understand the links between especially the S factors that are complex because they are very diffused, but they have so much materiality, and we just have understood that now. So coming back to the fixed income market, sorry. So basically, what I would like to say that, yeah, the way I see it is, I mean, I would put sovereign bonds aside. I think we have been, you know, especially beyond ratings, been able to really explore in a much more granular way what was a new way of looking at financial risk for this specific asset class. Now, I think. And again, I would put my hat of index provider here. And there are a number of indexes where in the fixed income space where it's actually challenging to have an ESG or climate version of them. And one reason for that is that you have to deal with private issuers for which we have basically no data on ESG because there is no reporting. And this is a very important area that we are actually looking now in terms of research, how we can if we don't have any data disclosed, how can we actually estimate the data, use proxies, you know, try anything that makes sense from replicating the existing disclosed information from similar companies that are listed. There are other challenges are that you have a number of sub-asset classes. You have agencies, you have munis, you have multilateral bond issuers. And for each one of them, you actually need a specific way of assessing ESG risks and climate risk. I always differentiate the two, but at the end of the day, this is the big challenge. This is where it's more complex than the equity ESG assessment. And the last part I would like to add is to say that there are some specific characteristics that have not yet been really well assessed, in my opinion. A lot of the fixed income in the corporate space has been a replication of what we have done in the equity space. But now I think more and more we have to take into consideration the specificities of fixed income of a bond issue. The duration is a very important factor that would definitely need to better account for, especially when we deal with climate risk. We know that the materiality of risks are not necessarily on the short term, depending on the type of risk we're looking at, but we're looking at bonds sometimes that have a 30 years duration. And we know that within 30 years, there's going to be a lot that would happen in the climate space that probably can change the configuration and the risk profile of the specific bond. So this is a challenge we really need to address.
Yeah, thank you very much. So looking forward a little bit to the sustainable bond market in the future. So what role can platforms play, Robert?
Thank you. I think that's a very important question. So at the moment, I think what we see is that there is a market for green bonds, as we said, not yet as a separate asset class, but we've seen also mostly, let's say, serious issuers who are concerned about also their reputational risk. I've heard about a case, for example, I think in Sweden, where a company issued a green bond and then bought a corporate jet for it. These cases, I think, will expand more and more because there's plenty of issues and not all of them are too concerned about their reputation. And I think platforms can play a role in providing transparency by providing, let's say, a central point of access for investors where they get information. We can provide a role with, let's say, smart terms and conditions. I don't want to say smart contracts because that's goes into different direction, which similar to a catastrophe bond have exactly predefined consequences. So, for example, if someone doesn't comply with a certain use of proceeds, then there is a grace period. If this doesn't heal the infringement, then there is a step up or penalty with a shorter grace period. And if this is not done, then automatically you would call the bond, thereby protecting investors, giving companies certainties and leaving it up to them. And you have a neutral instance who can enforce these things in a very automatic way. Plus, we can also, as a platform, of course, lower the entry barriers for new players into the market. So providing a broader universe by, at the same time, improving the quality of those issues.
Yeah, thank you very much, Robert. So let's move a little bit beyond from the current status quo to have a look into the future. So Sean, if you had 3 wishes regarding the sustainable bond market, what would they be?
Well, of course, one wish would be Robert and Nick and I are swimming in seas of green bonds. But let me make that a bit more practical for you. Every government, I wish that every government in the world was working feverishly on asset creation that we could fund with green bonds. And by that, I mean asset creation that is consistent with the world we need to live in. Sustainable transport, sustainable buildings, and so on. So that is my first and most potent and most important wish. And if we have any success with this green finance movement, it will be triggering that kind of activity in the real economy. I mean, we just finance at the end of the day. It's all about getting real economy activity in the right direction. 1. 2 is a little bit closer to home. I wish that Europe, China, Japan, and the US would line up together, shoulder to shoulder, with Europe speaking with a single voice in this, to make sure the whole world does shift. Because if those economies are true to their 2050 targets, we need to do this. If those economies are true to where they would get yield in the future and make sure the rest of the world changes so we can have a future for our children in Europe, then they have to work internationally to support the rest of the world to change. Joint blended finance solutions, common approaches to taxonomy. These are the easy things. There's a lot more. Marcus, you know that getting your clients to make money in Germany is one job. We're going to have to shift a lot of that capital to places in Africa or Asia. We're going to have to make that lower risk than it is now to make the money flow. And that's what I would really wish would be happening in the next stage. And frankly, by the COP in the UK next year, we need to see these 4 behemoths of economies standing side by side, pushing this kind of line. 2's enough.
Thanks, Sean. So one reminder for the audience, please mute yourself because we have some noises in the background. So we already mentioned the role of central banks. So Danae, could you elaborate a little bit which role central banks should play in the future on the sustainable finance agenda? And do we maybe need a green QE or sustainable QE?
Thanks, Marcus. Yes, it's really interesting to see how far central banks have actually come in this agenda. If you were telling me that we would be talking about central banks and climate change 5-6 years ago, it was something that they were just tipping their toes in the water. And now the NGFS that was mentioned already, it started with under 10 members, it's now over 70 members in just under 3 years. So it's been a lot of a big learning curve for central banks. I think the important thing also to think about central banks is to think about their different roles. So you mentioned monetary policy. That's one thing that central banks do. And the impact of climate change on inflation, on price dynamics is something that they are studying and will have to adjust their actions depending on that. The climate change is affecting the financial system. It's a question of financial stability as well. Some central banks have financial stability in their mandate. It's about supervising the financial sector in their jurisdictions. It's about running climate stress tests, microprudential actions. Nick mentioned the toolbox that he has published. I recommend that reading to all to see what central banks can do also on the supervisory side. There are also reserves managers. So 14.1 trillion of assets are managed by central banks. They're foreign exchange reserves. They're big players in financial markets. That's something that we often don't really talk about when we talk about central banks. A lot of these are, the purpose is for liquidity, is to support the currencies, but a lot of central banks are also integrating sustainability in their reserves management. So for example, the Swedish central bank, the Riksbank, said in our foreign reserves, we're not going to buy municipal bonds from certain parts of Australia and Canada because they do not align with sustainability principles. And that's because they want to protect the value of their portfolios. It's a risk question for them. And I think when it comes to QE, as you mentioned, the asset purchases that are part of monetary policy, it's again about we are not really pricing the risk in the assets we are buying. And on the one hand, the NGFS is saying that we do not believe that the ratings that we are using to decide what bonds we should be purchasing under those programs are correct, because we are looking at investment grade bonds, but actually some of these climate risks are not properly priced in. On the other hand, they're not taking the decision to favor certain bonds that are green bonds or to take out of their portfolios corporate bonds or sovereign bonds that are not in line with that. So there is a lot of work to do in terms of understanding the risks of the measurements. And I think the final thing that central banks are doing is also that they are important leading institutions in their countries that others look up to. They can be role models in terms of if they care about sustainability through their actions. Their leaders are often public figures. What they say matters. And even if a financial institution in the US, for example, knows that their central bank is not a member of the NGFS or their political leadership does not believe in it, the fact that leaders in the ECB, in the Bank of England do also affects them because they're financial institutions that operate across borders. So I think that's another important element. They are important institutions, have mandates that do cover climate change, and also they have very important and powerful tools at their disposal. So there is a lot more to come from them.
Okay, thank you very much, Danae. I see we have a raised hand from Frank. So Frank, do you have a comment or a question?
Thanks, Marcus. I have indeed both. Danae, you know me, I have a different opinion. I see the necessity of the NGFS, and I think it's a great organization, and I know what you have done, what eppf have done, what you all have done. And given the chairman will become the next board member of the ECB, speaks for itself, yes. But having said that, I think, and Sean, I would like to hear your opinion on that, the market on quality names and bonds, even the new gigantic game changer comes into the market with the EU here as issuing social bonds in such a dimension, the market is way too small that central banks should go into it, except they have pension money to manage. But I completely disagree with using reserves for that, even when they measure like the Swedish one with the risk factors here. Yeah? The private sector has not enough bonds to invest into. We have seen these gigantic books of the two issuance of the social bonds of the EU. Both of them were nearly 200 billion, or in one case even above the demand. Yeah? And this shows how rare these goods are. And I think particularly these quality issuers should be here for the private sector, for the quality long-term investors. And so this is my comment on that, and I'm eager to learn about what the panelist thinks about that particular, Sean. And the second thing is a question now more to Robert. Robert, you said in the beginning when you introduced your company, and I'm obviously knowing a little bit more about it, given my role there, but I would like to draw the attention here of the audience. You mentioned the point legal point, legally binding. What does that mean? Because in this world of sustainability, that could be an important game changer and factor, also against greenwashing. Can you refer to that a little bit? Thank you.
Damn, I guess I have to start, Marcus. Good questions, Frank. Look, I honestly don't care. We can split hairs about what's good and what's bad and what's perfect. I just want huge volume of issuance from anyone who's willing to step up, because I know the market is there. You know, I think we could place 10 trillion of green bond. Marcus and I might have a chat about it afterwards, tomorrow, if we had the supply. We simply don't have the supply. We will get the supply from AAA issuance from banks. But equally, if we keep working on the demand side, more central bank, there's no harm in that. The tighter, the tougher the supply problem is, the more people will come to market. And that's what is actually happening now. This year, we're going to see a big climb by the end of the year in thematic bond issuance, and green bonds will be back up there, and next year it'll go for the roof. So I push for green QE because I want more demand. And I think, frankly, from a moral perspective, I want my central banks investing in the future, not the past anyway. But is it the most important thing to worry about? No, you're right. It's not the most important thing to worry about. Let's work on the supply side. Do I want to put it aside and ignore it and say it's not a good thing? Damn that. Anything which helps our change now, because we have such a big job to do, because we have failed so much in the last 30 years to make progress on climate, needs to be on the table. Whatever it might be, none of us can afford to be saying, no, don't do that, it's not fiscally efficient or not efficient. Guys, whatever works now. That's my provocative response to you, Frank.
Okay, thank you, Sean. I see two more raised hands before we go over to Robert to answer his question. Nick and Michael Spitz, is it related to the ECB too? So,
well, central banks generally. I think one of the things we haven't mentioned, which is interesting in our discussion so far, is this theme of net zero, climate neutrality, and so on. And I think you were asking earlier about sort of wishes, but I think very much recognizing that for central banks, net zero is not one option among many, but actually is the best way of ensuring price and financial stability. So I think one of the things we'll start seeing is, you saw the Bank of England this year measure the temperature alignment of their portfolio, 3.5 degrees Celsius. Obviously, they often hold a lot of sovereigns, but that they, like other large asset owners, need to have net zero targets. If their economies are going to be European Union is going to be climate neutral by 2050, the book of the ECB will also need to be net zero as well. So I think this is going to be an increasing focus, which we'll see perhaps over the next year. And lots to learn. Central banks have lots to learn from other major asset owners, which are setting net zero targets. So I think that would be a really interesting area from a strategic risk management, but also a portfolio alignment point of view.
Okay, thank you, Nick. Michael Spitz, do you have a comment on the ECB? Okay, because your hand was raised. Okay,
that's a separate question. It's a separate question.
Okay, maybe we start with Robert first, and then we go over to Michael. So Robert, there was still a question about the legally binding things on the platform.
Yes, so generally the green bonds not being legally binding at the moment and not being a separate asset class. If I see, I don't know, German car manufacturers that start issuing green bonds, I think that's fantastic. But looking at the competition coming over from California, I would say, guys, you need to do more than just that. You need to step it up a note and a tone, and make your use of proceeds binding. we as a platform can stay in between, almost like a trustee, where we can provide protection, as I said, to the issuer, but also a protection to the investor, so that they can take this next step. I think the first one or two that will do this, investors will demand it in the future. I think it's just where gravity goes, because we will see more issuance, more demand. Especially if it's QE, everybody will jump on this, and we will see a wave of greenwashing, which we don't want to. We want to show that this is actually not a marketing gimmick, but this is something where we actually achieve something, because we're doing this for a certain reason, and therefore just saying I have non-binding use of proceeds, I have 1 year to invest them, I will be able to look at this as it fits me and as far as possible. I mean, all this legal language that I'm very aware of course, is not the place to put it in green bonds. You need real commitments, and you need real enthusiasm about this, and as I said, we are one way to providing this security to issuers, to investors, and to the world, but we're certainly not the only one. And our task is what we see it is really to push this over the line, so that investors will say, once the first one is done, why don't you do it as well like that, and cause this chain reaction. And then on the QE side, just a brief remark. I think you asked me before what platforms can do. I mean, we can provide access for companies that maybe are in the Schuldschein market or other markets that are not yet bonds, so they can enter into this green space, and we see lots of interest from all over the world, by reducing costs and by reducing entry barriers. So I think this is another way to, let's say, balance demand and offering, but always with the quality in mind.
Okay, thank you. Frank, does this answer your questions? Okay, great. So there was another question or comment from Michael Spitz.
Yes, thank you very much, Marcus, and thanks to the panel for great explanation so far. I have two maybe provoking thoughts. I'd be interested in your view. And first of all, I do apologize to Jean that I was speaking and not being muted before. First of all, given the fact that there are certain things that companies can do, but there are certain things that only governments can do, why don't we just introduce for Solvency II and Basel 4 or whatever number it is, that if a state doesn't sign the Paris Agreement, it's just no longer zero risk weighted, and you see a swift difference in US Treasury change. So I think it would be just very, very easy for someone like the BIS to say, we're no longer accounting for treasuries who don't sign. Mr. Biden or President-elect is currently thinking differently, but I think this could really change the needle. That's the first comment. And the second thing, as we're all targeting, at least within Europeans and being around in the bond market for at least 3 decades or so, and luckily enough got out of, as we're trying to get into a zero or carbon neutrality within Europe, why are we still calling it green bonds? Shouldn't we just call it bonds and call the other black bonds or brown bonds? What's the point of green bonds? I think it is really, as we are moving over the next 20 years or 30 years into something, there should be something, but ultimately are still not green, yes, but that's like having a bad bank. That's the same thing, like having your own little thing. So why not immediately? And why I'm raising this is we had a conversation with the Commission last week, where they also said we're changing our attitude towards giving incentives for cars and so on and so forth in order to penalize if you're not complying with that. So why does the capital market experts like yourself believe you can continue to play your existing bond game as you currently do? Thank you. Whoever wants to take these questions.
Yeah. Who wants to answer? I think Sean is laughing, so.
I'll start. Great questions, Michael. Definitely worth listening to your conversation earlier. Two points. Great idea, Solvency and Basel, absolutely. The question is, have we got the ducks lined up to win that now? is the only question. Remember what my comment earlier, we have to do everything. There is no such thing as an optimum now. We don't know what's going to work. We are so far behind. We are running in the back of the line in a marathon, right at the end, and we've only got the last quarter of the marathon to go. We've got a lot of catching up. Try everything and get it all going. Definitely try those, and let's see if we can get the political objective. But there will also be no single silver bullet. Like my friends, the economists, who say, just give me a carbon price. We won't do anything else. And pigs will fly. We need to do everything, is the answer. So absolutely yes. And bonds, yes. You know, I spoke to an investor in Sweden, I can remember now, it's someone from one of the APs, who was saying, you know, in Sweden, which is of course the world's #1 per capita green bond market, in Sweden, said in a slightly superior way, if someone comes out with a bond and it isn't green, we ask them what's wrong. Is there something we need to know about your company? And I thought, yes, we can get there quickly as the next stage. If a government is issuing bonds and they're not issuing green bonds, what's wrong with that government, corporation, etc.? So that's one of my wishes, and I think we can get there quite quickly. And then the extension of that will be all finance needs to address climate mitigation, adaptation, or resilience, which is, by the way, the same as the Sustainable Development Goals. And you're right, it should all be part of this.
Okay, who else wants to comment? Nick?
I mean, I think what is interesting is we've been talking very much about the thematic bonds, but I think also we can maybe think about sort of driving from the other end, the regular bonds, and maybe this is not so much about products, but actually the role of institutional investors as holders of sovereign bonds to encourage better practices by governments. We've seen that a live case study actually this year in Brazil. Lots of international concern about the fires, deforestation, and so on. Leading investors making clear that they saw this as a systemic risk in their holdings, approaching the Brazilian government. And very interestingly, the Brazilian authorities, notably the central bank, responding with a new sustainability strategy. So actually linking together two of the conversations we've had on this panel between the bond market and the central bank. So I think, again, if we work at both ends, the sort of thematic bonds coming this way, and then the investor stewardship on that side, we should get to a position where certainly all bonds should be net zero by 2050, that's clear. Whether all bonds are fully aligned with other issues, environmental or social, I think we're still a way off. So I think there's going to be work for us for at least the next 3 decades, but maybe beyond that as well.
Thanks, Nick. So Danae, you also have a comment?
Yes, thanks, Marcus. I think these are great points, Michael, great questions. I also agree with Nick that I think where we're heading is to a point where everything has to be sustainable. And I think also it's a change in shift, a kind of a shift in the way you're seeing it. And also when you think about, for example, the green taxonomies, why should we not be creating a brown taxonomy as well when we're thinking about green supporting factors or green subsidies? We should be thinking about brown penalizing factors and seeing it from that perspective of risk. It's something that is seeing pushback, particularly from the financial sector. If you could have a lower capital requirements, why would you want to have higher capital requirements for brown projects? But it is something that central banks are also considering. And also to go back to Frank's question about central banks crowding out the market in buying green bonds, again, here we can apply this shift. It's not just about buying the green instruments, it's also about divesting from the brown instruments. And it's not just divestment, because that can also be the lazy solution. And yes, for investors that are just starting on this, maybe that's something that is easy to do. We can make headlines. It's important because others can follow your lead. But it's also about how do you help those industries that need to transition, because you can't just completely exclude the brown industries from your portfolio if other investors are going to go and buy those instruments who don't care as much about sustainability, because unfortunately we're not at the point yet where everyone sees this as a reputational risk, as a material risk to their portfolio. So there will still be demand for the brown assets. So how do you effectively leverage your power? And central banks, I mentioned, are big players in terms of the reserves, the pension funds, again, overall 17 trillion of assets, public pension funds globally, they do have that power to use voting rights, to use shareholder engagement, to steer industries that are brown into a more sustainable path of transition. And I think that's also important when you're talking about penalizing the brown industries. You can't simply forget about them. And we need to find capital market solutions for that as well.
Thanks, Danae. So, Michael, does this answer your questions?
Yes, it does indeed. Just one comment I had. I don't think by 2050 we will all be 100% green bonds in the current definition, because there will be some remaining businesses that still need to be funded, but this will go similar to equity pieces of CLOs or something like that. So a very tiny market, but like, let's agree on 95%.
Okay, great. So let's look a little bit more into the future, and yeah, let's come back to data again. So Sylvain, what are the foundations of transparent and credible sustainability reporting, and how can it be improved in the future?
Yeah, well, I think, in the continuity of the discussion, I think, it takes a number of different initiatives to actually change a market, change an industry and behaviors. And I think from a reporting standpoint, if I'm how to formulate that, I hope that, more and more there would be more a recognized standard on reporting for sustainability reports, and that we, as we have done with the financial reporting, you can assume that, with more regulatory pressure, with more investors' pressure to have disclosure on data, we can expect both to have more data disclosed, which is, a prerequisite to have reporting, and then to agree on a reporting format that would become a standard in the industry, or a limited number of standards, so that it is really actionable from an investor standpoint. It makes it comparable, it makes it harmonized. So we're not yet there, obviously, but I would assume that this is the direction of travel, and that, there are a number of initiatives at play at the moment. I know that the Big Four are really very proactive to take their share in the space, and I would say that, if all the global players from the auditing world, from the stock exchanges, from the all the different stakeholders converge into the same interest, you could it will enable it to happen. It's not yet a success, right? We are not yet there, but obviously it would facilitate it.
Okay, thank you very much, Sylvain. We talked about developed countries at an earlier stage, but Nick, why do we need also look beyond developed countries when we talk about just transition?
Well, exactly. I mean, I think if we think about where actually most of the capital needs to be applied for sustainability, it is in the emerging economies. They're the biggest populations, as we know, the biggest risks. And many of them, as we know, are also now more high carbon. China, more high carbon, the European Union, countries such as South Africa, very high carbon, and so on. So if we're thinking actually about the just transition, perhaps it's not going to be the image of the Pennsylvania coal miner, but if we're thinking about people in China, in India, in South Africa, rural communities in Brazil. So that is one of the areas I think that would be particularly good to focus on in the investor community. We're working in India to start thinking about how India can fast forward in terms of the green agenda, but particularly bringing its socioeconomic development priorities to bear. And there, I think we need to also think more broadly about how we can think smartly about using development bank finance, risk mitigation tools, and so on. And wouldn't it be good to see a whole pipeline of sovereign bonds and other public authority bonds coming through in the run up to COP, where we have risk mitigation instruments we've applied in the corporate bond market, but we apply that in the sovereign bond market as well. So we've already seen some great examples, but I think we could see a real drumbeat of bonds coming through in the next year. And sovereign bonds, I think, are particularly useful instruments for dealing with just transition. They can do the green, but also obviously they can bring in the social function of the state as well.
Thank you.
If I may add to this in terms of emerging markets, I think it's a very important point, but I think we need to jump further than just to look at green bonds, and we need to look at biodiversity. So there's an initiative at the UN which I think got stalled a bit in the last COP. Hopefully in the next COP will continue in terms of accounting standards for biodiversity, and this will allow to actually developing nations to create to issue bonds backed by assets that they have. So we're currently working on as I said, largely pro bono issue for a rainforest conservation bond, where we want to take as collateral the CO2 equivalent that is bound in the rainforest of this biosphere territory. By activating this, we can provide two things. We can provide capital to the country in question. We can provide social uses of the monies raised. We can increase the development, and we allow countries to use the resources that they have, and we all benefit from. So I think that there's a very important part to go forward, and I think if we are able to include biodiversity and create a market similar to CO2 certificates in these areas, we will see much more social bonds and supply of this, because then suddenly emerging markets can use the assets that we just take for granted.
Okay, thank you very much, Robert. So I go now to the audience. Are there any questions, comments to our fellow panelists? So don't be shy. Any questions? Okay, if not, I have another one. I mean, we also said we don't only have to focus on the E, so the S factor is also very important. We've talked about the common language and sustainability, the EU taxonomy. So how about the social taxonomy? Who wants to answer?
We're working on it. Part of the EU platform, there is a work group specifically developing criteria for social, if you like, backfilling behind the European social bond, which has been 28 billion placed so far, 300 billion of orders. So the demand is well and truly proven. The first draft of those criteria will be published for public consultation in May, which is a very short period, given how big the agenda is. What, as climate bonds, we are arguing is there is a direct correlation between social, sustainable development goals and climate resilience. They're all indicators of climate resilience. So we're suggesting these are all extensions of a large universe, not separate silos. Of course, there is a committee looking at this, so that's just our view, but it is underway and we will see a first stab in May.
Okay, thanks, Sean. We have a question on the chat. What to expect from the politics to support sustainable finance? Who wants to answer?
Well, we just look at the difference which the election in the US has made with President-elect Joe Biden, and within days, the Federal Reserve announcing that it will seek membership of the NGFS. So I think we know that politics makes a huge difference. One of the things I'm certainly hoping for is that we'll now have the potential for a more functioning global system, particularly the G20, which obviously played such an important role in the crisis response in the last crisis and has not really been functioning as well as it should do. So I think we have that potential of the major actors now coming together. We have now 75% of global emissions covered by countries or incoming governments committed to climate change. So that's very powerful. And if we link politics as the expression of the will of the people, then we know we have that very broadly. So I think we should never underestimate the importance there of politics, and therefore that gives a great sense of direction, I think, for financial market participants to start designing the products that are going to respond to those needs. I would emphasize, if you read Joe Biden's plan for climate, how strong environmental justice is a theme of that. It is a very, very powerful theme. And in terms of expression of just transition, it's probably one of the best policy frameworks. And it's quite different from the EU, which the EU, I think, is very much looking at the downside risk. He's really looking at the upside potential in terms of good jobs for what's called the American middle class. So I think have a look at that, because it really sets out quite a new avenue for the US. Obviously, we'll leave it to US politics to see whether it will be implemented, but very, very interesting platform.
Okay, thank you, Nick. So we have 2 more questions before we go to the final statements. The first question is if corporate issuance have the same criteria as sovereign bonds. And the second question is, what would you recommend for commodity-based developing countries in regards to green bond growth? And relating to the first question, there's also the add-on, how do we handle ESG issues with China? So
on a commodity, give you a flavor of where we're going here. We need commodities. We're going to shift the whole planet to being a clean green and deliver on development goals the next 30 years if we're successful. There is a lot to be done, but we need to make sure it's the right kind of commodities. And as we, for example, extract resources in the mining sector, we do it in a way which is consistent with not damaging the other environmental objectives we have. Now, we've taken that to be the norm in places like Germany. It has to be the norm globally going forward. So that gives us a clue as to where we're going for commodity economies. There is a lot to be done, which will require commodities. There are a lot of opportunities for those commodities making money. And I can tell you in Brazil, despite a crazy president, we've recently signed an MOU with the Ministry of Agriculture about agricultural commodities that meet the CBI and European criteria, backing green bonds out of Brazil, for example. In the mining sector, we are in the EU platform, and with some of the other countries that are working on taxonomies like Chile, developing criteria for the mining industry for sustainable bonds. So there is definitely a route path, but we need to change things, guys. Maize at the moment is very bad for sequestering carbon in the soil. We have to either shift crops or shift to genetically modified maize, which sequesters carbon. In every sector of the commodity economy, we've got a similar shift we have to look at figuring out how to do. And so there is huge work to be done. There is money to be made. There is opportunity if we think future, not past.
Okay, great. So the second question and last question was, if corporate issues have the same criteria as government bonds, and how to handle especially ESG in China.
Maybe I could jump in on the China point. Clearly, I think what is one of the real factors that made sustainable finance a global issue was the entry of China and putting green finance onto its platform when it hosted the G20. So I think clearly it's very strong on the green finance side in terms of the developments of the green bond market, the role of the central bank. Probably real issues that we need to look at are disclosure. I think it's recognized that improving disclosure by corporates, and obviously the whole Belt and Road initiative. That's one of the major initiatives there. So I think really focusing on the quality of that and making sure that those investments are aligned with sustainable development goals is going to be a priority.
Okay, thank you. And regarding the criteria, anyone wants?
Look, mea culpa. I'm working on this at the moment. We have a working group between China and Europe, the governments, looking at harmonizing taxonomies. Now, that won't pick up everything in G. It won't pick up everything in S, but it will pick up E very thoroughly. So we have a commitment from both governments. We'll be releasing recommendations in a staged process during the course of next year. And our goal is a harmonized green bond market as the first stage of a broader harmonized market. We will need to get to do it in the other sectors. We'll have some comments as the year goes on next year, but it'll be a little bit more challenging because we have different views. You know, the truth is on those areas. So it'll be a little bit tougher.
Okay. And I could maybe add to that. I mean, as I said earlier, these are different animals. I mean, a sovereign bond and a corporate bond are really different because, you know, the issuer is really different. And if you're looking from a credit rating perspective, I mean, if you're looking at the default of payment, it's really different to look at the economics of a default of payment of a corporate versus a government, really. And the drivers behind it are really different. So it's really, this is where I say, you know, we need to account for the specificities of each asset class, corporate, but also, you know, all the sub asset classes of fixed income. And this is a challenge, really.
Okay, thank you very much. So it's 5:15. So given the time, I would like to ask for a final statement from each of you. So I start with Danae. In 5 years from now, sustainable finance will be?
Thanks, Marcus. Great discussion. Great to be part of the panel. I think in 5 years, what we're seeing is we'll move beyond just thinking about climate. We're expanding into thinking about biodiversity, social bonds. I think we'll move beyond this being a niche area of capital markets. We're already on the way. I really like the discussion we had about we shouldn't be thinking of green bonds. We should be thinking about normal bonds and everything else. I hope we get there. I don't think we'll be there in 5 years, but we'll be on the way. And I think also the change in policy in the US will be a very important game changer for the next 5 years.
Okay, thank you very much. So Sean, in 5 years time from now, sustainable finance will be?
There will be a larger market. It'll be like an ice cream market. There will be blue bonds, green bonds, resilience bonds, transition bonds, the whole discussion there. But they're all part of an ice cream market to achieve the Paris Climate Change Agreement, with other factors like social. 1. 2, it will be big. We need to be seeing something like $7 trillion a year flowing towards solutions that create a better future for ourselves. Way, way more than we're currently seeing now. Probably 40 to 50% of that will be sovereigns. Currently 55% of all bonds are sovereign. So you get an idea. But whatever, it'll be large and we will see the numbers. Because frankly, if we don't see large numbers in 5 years, our future is toast. So we've kind of got to get there, folks. That means you, Marcus, and you, Frank, I need you to do a lot of deals. Nick needs you to do a lot of deals fast. Thirdly, our governments will have shifted to asset creation that's green. So when they're looking at where they're designing their economies and looking at things that we can invest in our pension funds and insurance funds, everything should be green and sustainable. And I think in 5 years, we have a shot at making that happen.
Okay, thanks, Sean. So Nick, in 5 years time from now, sustainable finance will be?
It will be massive. I mean, the estimates vary, but we have sort of almost 400 trillion of assets, equities, bonds, bank debt in the global financial system. So we're going to have to take material shares of that. Will need to be clearly aligned with sustainability. I think clearly it's going to be a very rapid and often very disruptive ride. I think we've seen this year just how transition can be telescoped. We thought the oil market would peak in the late 2020s. It peaked last year. So don't expect this to be smooth. And also don't expect it to sort of slow in its pace and become normal and so on. It's still going to be very, very fast paced. And I think it's going to be a sort of core part of every financial decision.
Thank you. So Sylvain, in 5 years time, sustainable finance will be?
Yeah, I agree with what has been said. I think it's going to be a big market. And as alongside becoming a real business, it's going to be more regulated. It's going to be more creative. It's going to have a lot more stakeholders that are going to put energy into this. And, you know, of course, there are the incumbent players, but you can think of a bunch of new players that will be part of the game. And for me, it's going to be a more systematic. I think 5 years ahead of us is too early to say that it would be fully incorporated into mainstream finance. But this is the way we are going, really. And I really think about mainstreaming, and I think the year after year it's accelerating.
Okay, thank you very much. So last but not least, Robert, in 5 years' time from now, sustainable finance will be?
Yeah, I would agree with everybody that the market will grow and has to grow and needs to grow. I think for this to happen, we need to provide also clarity for the clients who are the investors, clarity for the issues, and that means policy, that means laws, that means taxonomy. So all the work of the people here in this presentation and in many more forums is really valuable to build the basis for building a broader market, because without certainty it will not get there where we need it to be, as Sean said.
Okay.
And we don't want to be toast.
Okay, great. So thank you very much to the 5 great experts here on the panel. Thank you very much, Ilka Hartmann and her team of BCCG. Thank you, Frank, for organizing. So yeah, have a great day.
Thank you.
Give me 1 minute to thank all of you, because I think it was a fantastic webinar with so many experts. I'm thrilled. I want to hand over a virtual bouquet of flowers to the lady and a virtual bottle of wine to the man. So I hopefully in the near future we can have a live panel with you. Then you'll get the wine and the flowers. Thank you for all the participants, and we really want to keep this up. A very, very special thank you to you, Markus Pratsch, also to Frank Scheidig and the DZ Bank, who made this whole possible, who put this together and offered the BCCG the opportunity to have this great panel. Sustainable finance, sustainability, this is a big topic which we want to drive further in the BCCG, and it's great to have you on our sides. And yes, thank you very much again. Stay well, and we hope to meet you either online, but I'd love to meet you personally in the near future. Enjoy a nice evening, and thank you very much.